S&P 500 tends to underperform in September. If you just take a look at it, you can see over the last 10 years, the month of September has been the weakest month for an average return of under 2%. Now, if you look at the end of the year, you can see from October the 1st through to the end of December that there's 90% winning trade percentage in the S&P 500 in the last 10 years, 80% over the last 25 years. So this September period is a bit of a dip, and you tend to see weaker returns in the S&P 500 over these few days. So just be aware of that as we're coming into a lot of uncertainties in the markets right now. Fed's focusing acutely on jobs. We've got ADP, we've got Jolts job openings, we have initial jobless claims, continuing jobless claims, US non-farm payrolls, all out this week. And if we see a very strong labour market, then that could mean the Fed could take their time on cutting interest rates, and that could be a catalyst for further S&P 500 selling. Look here from 1st to 30th September, 40% winning trade percentage, and average return 2.06% to the downside. So just look out, and also look some pretty hefty gains in the last few years as well. Now, if you just falls in the last few years, and if you look at the S&P 500 technically, got this long trend line from October 2023. We've got a bullish piercing line, which is testing that trend line, and that is supportive of buying. Okay. And that's bullish, but if that collapses, that 5547, and that bullish piercing line fails, then that does open up a way down to 5500 and below. Now, the major trade risk here, of course, is despite short-term patterns, look, the overall trend for the S&P 500 is up, right? So it's a fool's game to keep shorting all the time, obviously. However, just to be aware that this seasonal period of weakness is coming up. Remember, don't just trade it, season exit, come along here to season X for literally thousands more seasonal insights that are just waiting to be revealed.